Good evening, ladies and gentlemen, and welcome to this evening's Strategy of the Week for August the 16th, 2013, Going High with CI. My name is Kevin Crowe, Manager of Retirement Services, and I'll be your presenter this evening. It is the goal of nearly every investor to utilize a trading strategy that is simple to understand, easy to implement, and consistently makes money. Combining that strategy with a superb market timing system such as the VectorVest confirmed market calls, you are likely going to have a winning system. Let's take a look at our objectives for this presentation this evening. Our first objective obviously is to make money, but make money consistently and systematically. Too often in my coaching I see people who are in too big a hurry to make money. As a consequence, mistakes are made. When mistakes are made, one's ability to feel confident to continue with that strategy begins to fall off, and people begin to search for another strategy. The key is consistency and systematically implementing a plan that's consistent with your goals and objectives and your risk tolerance. Investing can be stressful for all of us, but if we can find a system that helps us feel comfortable, the likelihood of success jumps immeasurably. Third is to protect our capital. We want to be able to continue to have money to play another day. And our last objective is to show you a system that we advocate so often at VectorVest, and that is when to buy, what to buy, and when to sell. Let's take a look at the plan we'll be discussing this evening. First of all, we'll begin buying on a confirmed up. We are going to exclusively use the confirmed call market timing strategy of buying on a confirmed up and selling on a confirmed down. We will buy one stock at a time, usually daily, until we have filled our portfolio of 5 stocks. We will close all positions on a confirmed down. We will invest $25,000 of capital, and we will have specific profit and stop loss targets. So let's begin our journey by going to our Unisearch program. I'm going to come up here to Unisearch. I'm going to come over here to Searches, Price, Volume, and I'm going to go down to High CI Prospects. Let's cover very quickly the parameters. First, we have a stock price split adjusted, hitting a new high over 52 weeks. Next, we have stock price split adjusted. We're using a channel that has a 100-day look back. This is a 50% channel. And we have a trigger in this channel when the stock price is 50% or greater above its mid-range value. Next, our stock average volume is going to be at least 20,000, and our stock percent volume is going to be equal to or greater than 200. Now, I mentioned a moment ago that I'm going to change some parameters, and here's why. I wanted to make sure that we did not include any very low price stocks that would distort the number of shares owned and therefore potentially distort our returns. So the first thing I'm going to do is I'm going to change our stock average volume. Click on Values, click on Custom, and I'm going to change this to 25,000. Next, I'll come down here to our open parameter line, click on Stocks, click on Price Volume, click on Price Split Adjusted. And here what I'd like to do is I'd like to exclude any stocks that are lower than $2.50. So I'll come down here to equals or greater than, our custom value, and I'm going to type in 2.50. And finally, to the upside, I also wanted to make sure I excluded stocks that would be getting to a price where using a $25,000 capital investment might cause us to also distort by having too few shares. I'll click on Stocks, Price Volume, Price Split Adjusted, and this time I'm going to use less than, and I'm going to type in 100. With that complete, we're going to go to our backtester and put in place the following functions. First, we're going to go to New to create a new backtest in our account settings. We're going to make sure that our initial investment is $25,000. We're using $20 as commissions per trade. Next, I'll click on the Advanced button. we can confirm our $25,000, our $20 per trade. We will not use margin. We will not account for interest. We will buy at the next day's open, and we will use a daily pricing mode. Next, I'll come to confirm calls. We have a number of selections, but for today's presentation, I'm going to use the confirm call system only. With that in place, I'm going to come to automation rules, confirmed up. I'm going to scroll down until I find searches, price volume, and I've already created one that I've called High CI Prospects /Aussie, and I'm going to click on that because that has the parameters that you just saw me adjust. Next, I'm going to come to our stop criteria. I'm coming down to percent gain or loss. I'm clicking on that, and I'm going to change our parameters to the following. Our gain will be 25%, and our loss will be 8%. Come to more settings. We are going to use 5 positions in this back test, and I'm going to move this slider bar all the way to the left because I want to try to open 1 position per day until 5 positions are reached. We'll click on Don't Close Any Open Position. We'll scroll down. We will use odd lots. I've asked our system to not repurchase a stock that I currently own, and I can do that by moving the scroll bar left or right. We're also going to make sure that we limit repurchases. As you can see, it says here, do not purchase a stock that I currently own. And finally, don't buy if the stock violates our stop criteria at purchase, and we will have a maximum percentage of a stock's average volume at 10%. Now, I've taken the liberty to run these back tests so that we can spend our time reviewing versus actually watching the back test being run. And the first back test that I ran, we'll call it High CI1. As you can see, it came from our confirmed calls list, and I'm using the date of the 19th of December 2012 to the 15th of August 2013. This was the first confirmed up in December, which carried over into 2013. And our value at the end of that period of time was $27,940.04. Let's take a look at the chart. Well, as you can see, it had a very solid run up. And as designed, when we hit this confirm down on the 20th of March 2013, we went to cash, which is depicted by this horizontal line. One of the observations I've had over the years in working with investors is too often people overtrade. So this is a strategy that's designed, as you can see by this horizontal line, to keep you out of trouble when the markets are not cooperating. Presently, we're at 28,121, up 11.76%. Our commissions were very nominal at $420. Our annual rate of return, outstanding at 17.97% for a conservative strategy. But this is what I'm really impressed by. The drawdown was 3.49%. Now let's take a look at our second backtest. We'll call it High CI2 using confirmed calls. And our date was 1 year prior to this original backtest to the closest confirmed up, which occurred on the 27th of January of 2012. End date is the same. You can see we earned a little bit more money. Not surprising given that we had some more time. We had, again, very solid percent winners at 66.67. Our percent gain loss was at 20.94. Annual rate of return, very solid at 13.51. A very impressive drawdown max of 6.66. Again, the same chart pattern, very similar, with periods of solid appreciation followed by periods of going to cash, and this repeats over and over and over again. I hope you're beginning to see a picture that making money is not only the money that you make while you are in a confirmed up and your strategy is working, but protecting those profits in a confirmed down. One of the other impressive parts of this strategy is, other than here right at the very beginning, we were just slightly under our original capital. You can see once we began to make money, we never went below our original capital from that point forward. And finally, we're going to take a look at high CI 3. Again, our confirmed calls, except this time I wanted to go back and I wanted to see what would have happened if we brought this back to March 24th of 2009, because that was the first confirmed up call in March after the very devastating market implosion that began in the fall of 2008 and into March of 2009. Well, our value was $37,089. We had 53.7% winners. Our percent return gain loss was 48.36%. Yes, commissions were higher, but we're also bringing into consideration almost 3 more years of markets and market timing. But we had a very respectable 11% return over that period of time. Our drawdown, although a little bit on the higher side, is still a very respectable drawdown given the severity of the period that we were in, and also a very bad period in 2010. So let's take a closer look at that chart. Again, you can see a beginning that began in 2009. You can see the series of confirmed calls. We did have a strong drop-off in 2010. In fact, we still didn't put our head below water. We began to have a very robust rally, confirmed down, back into cash, short-lived rally here, confirmed down, back into cash, and so forth to the present. Something worthy of mention, this is a strategy that we teach in our U.S. Retirement Income Workshop, and it's received very strong and very positive reviews by our attendees. And I wanted to share this with all of you this evening because I do believe it's one of those, especially for those of us who are now over the age of 60, where protecting capital becomes as equally important as profit, that this might be a viable strategy for you to consider. So let's finish up with some observations and conclusions on this evening's presentation. First, as I hopefully have demonstrated and you have seen, the consistency to this particular strategy. Making money in confirmed ups, getting out when either we hit a confirmed down or we hit our sell stop or our buy stop. And consistency in trading is one of those virtues that is important for people to acquire. We have solid money management, as I just described, with our confirmed down market call system overlaying our buy and sell stops. We had, as I demonstrated, some relatively low drawdowns. We demonstrated a very clear system of when to buy, when to sell, and hopefully you've been able to see a system that was very simple, disciplined, and systematic. As I stated a moment ago, this is a very solid strategy and should be given consideration as part of your retirement planning. I'd like to thank you for attending this evening's presentation of Going High with CI, and I hope you have a pleasant weekend.